Wells Fargo is one of the oldest and most powerful banks in the United States. As of 2022, the bank has nearly $2 trillion in its hands, ranking fourth in commercial banking nationwide. But since 2018, Wells Fargo's growth has stalled out with a hard cap on its assets ordered by the Federal Reserve.
They're capped at something close to $2 trillion in terms of its balance sheet.
That cap on growth came after reports of fraud at the bank emerged in the 2010s.
We all know about Wells Fargo's fake account scandal.
As this scandal has come to light, Wells Fargo has paid billions of dollars in fines and sent numerous executives out the door. Today, the bank is led by CEO Charles Scharf, a protege of JP Morgan's Jamie Dimon.
I was brought in to bring about substantial change at Wells Fargo, and we have made tremendous changes.
Various parts of the government are still investigating this iconic bank, including offices for consumer protection, securities, workplace safety, and banking. Scholars believe the government has grounds to go further.
The Federal Reserve, in certain extreme circumstances, has legal power to order effectively a breakup of a large financial conglomerate over a certain threshold level of assets, and Wells Fargo is clearly way above that threshold of assets.
Chairman Brown, I'm very confident that we have made changes which will enable us to put all of our historical problems behind us.
So what did Wells Fargo do to end up in Washington's hot seat? And what does the future hold for this historic American bank? The business that became Wells Fargo began as a mail delivery service connecting key points on the U.S. East Coast and Midwest. The founders, Henry Wells and William Fargo, worked with other couriers around the country. Wells and Fargo split off from this group to form their own company in 1852 in pursuit of business opportunities in the California Gold Rush.
In the beginning, they ran express parcel services, essentially, via horse-drawn stagecoaches, and that's why the stagecoach is still, part of the brand of Wells Fargo.
Over time, it evolved to be a traditional bank.
Wells Fargo makes money like any other bank makes money. There's an old saying, that banking is a 3-6-3 business, which is they take in deposits and they, at 3%, they make loans at 6%, and then they go ahead and go play golf at 3 p.m.
The bank used this business model to become a cornerstone of the U.S. financial system throughout its most notorious episodes. For example, the bank that became Wells Fargo survived the Great Depression of the 1930s, which saw nearly 7,000 banks close.
The story of banking in this country is a story of consolidation. After the transaction buying Wachovia in 2008, 2009, it actually, for the first time, had a coast-to-coast network of branches.
The consolidation wave has resulted in not having any alternative to banking at a large bank like Wells Fargo. Wells Fargo may be the only game in town, or it may be the most convenient game in town because they have so many branches.
Today, Wells Fargo has nearly 4,800 bank branches open across the country.
We are, I think, the biggest of the banks here in terms of our presence in rural America.
Starting in 2000, the new wave of consolidation in the industry was happening between banks and primarily securities firms because now it was allowed. Whereas before the year 2000, it was not legally permissible. Now we started seeing not only large financial institutions, but also diversified one-stop shops, as the saying went at the time. And institutions like JP Morgan and Citigroup and Wells Fargo and Bank of America Corp, they all are a product of that wave of consolidation.
Wells Fargo was also an early mover to online banking, launching its first website in 1994. It invested in companies like Quicken, a digital bookkeeping software, and today it's one of many banks behind the digital payment service Zelle. It's also historically been one of the biggest mortgage lenders in the States.
Turn the clock back probably 10 or 15 years, you would find most of the banks up here as the largest mortgage lenders in the country. That's not even close to true today. The non-banks have taken an increasingly larger share of the market.
Changes to American laws allowed Wells Fargo and other banks to open new and riskier wings that trade securities and derivatives. While one division of Wells Fargo trades, another may be helping the government execute things like the Paycheck protection program. But at the core of this institution sits a traditional bank with federal insurance for its depositors' funds. In 2021, Wells Fargo managed average deposits of $834 billion. They used these deposits to go out and make more money.
A bank uses its own balance sheet to make loans. It takes deposits from people like us, depositors, who then use those deposits basically to make payments, liquid, safe payments.
Anybody who's looked at their checking account knows that it essentially pays zero. So they've got these very cheap source of funding from essentially the American public, and then they make loans.
Wells Fargo's wide footprint makes it centrally important to the United States, and that made reports of a multi-million customer scam at the bank headline news in recent years.
People were feeling so pressured to meet sales quotas that they were cheating.
We're talking about a scandal here that involves thousands of their employees cheating tens of thousands of customers out of money and making millions of dollars doing it for the bank.
The trouble at Wells Fargo began in the sales department.
When you talk about Wells Fargo, it was always talked about a strong sales culture. When you look at sort of the postmortem, it turns out that for a lot of these people to reach their sales goals, they actually just invented customer accounts. They put real existing customers into products that they'd never asked for, and they falsified information, falsified signatures, changed phone numbers on these accounts so that people couldn't complain. They had several mottos over the years, but one of them was 8 is great.
Translation: try to sell 8 products to one household. In 2013, at the height of the scandal, a typical customer household at the bank had over 6 products in its account, which was 4 times higher than the industry average.
So what happened here was the incentive within this institution, within Wells Fargo, was to utilize the tremendous reach of the consumer banking segment of Wells Fargo with all of those branches. That doesn't mean that every diversified financial conglomerate goes as far as opening fraudulent accounts for the existing customers without letting them know, because the internal reward system actually incentivizes such fraudulent behavior. That was the reason why that scandal was really so incredibly mind-blowing. And that's why Wells Fargo really got into trouble.
Reports suggest that up to 3.5 million fake accounts were opened by Wells Fargo. That said, it wasn't the only bank opening up fake accounts at the time.
Chairman Brown, we regret, and I take full responsibility that we did open up unauthorized bank accounts. It is going back to 2010.
But at Wells Fargo, at least in the eyes of the government, a wider and more troubling pattern was emerging. Regulators found that some parts of the bank were violating laws that protect U.S. military members. Wells Fargo was also fined for charging customers late fees for delays that the bank itself caused. And the bank was issued an SEC fine for giving investors bad trading advice in the pursuit of profits from fees. The bank was also fined repeatedly for retaliating against internal whistleblowers, first in 2017, then again in 2022. While these scandals unfolded, Wells Fargo sales employees were paid as little as $30,000 in base salary, with great incentive to make bigger and bigger sales. The new CEO made $21 million in 2021. He says that the leadership has changed and they're addressing many of the problems, despite delays.
Between 2017 and 2021, we increased average wages for our U.S. hourly employees by nearly 25% and increased investments in our U.S. employee benefits by 20%. Almost 70% of our company's operating committee is new since I joined. Though our work is not complete, Wells Fargo approaches issues differently and is a better company than when I arrived.
In a statement to CNBC, Wells Fargo said the bank is revising its management, risk, and control frameworks while changing the company's culture and policies. They said there's more work that they must do to rebuild trust and that they're committed to doing that work. Legal scholars say the long list of harms unfolding at Wells Fargo is evidence of larger issues within American banking.
The fact that a large institution of such importance was nevertheless able to engage in fraud, in this illegal, effectively, transactions on such a scale, that is staggering. That shows a pervasive pattern of non-compliance. And it also shows that the top management and the board of directors of Wells Fargo was really not doing its job properly, and they're much more prone to abusing their power to increase their profits. And that they're so big that they will never be allowed to fail, and they know it.
We still have a problem on Wall Street where these giant financial institutions think they can make money, they can build profit models around cheating the American people.
In 2018, Senator Elizabeth Warren asked the Federal Reserve to place a cap on the assets of Wells Fargo. The central bank under Janet Yellen obliged, and current Chair Jerome Powell is upholding the cap.
We're, of course, very closely monitoring Wells Fargo's efforts to fix its widespread and pervasive problems. They represent a serious matter to us, and the firm is required to remediate them. We continue to hold the firm accountable for its deficiencies with an unprecedented asset cap that will stay in place until the firm has comprehensively fixed its problems.
It was the third largest bank after JP Morgan and B of A. They're frozen in time while the rest of their competitors have been able to grow in the low interest rate environment that existed up until very recently. And you've seen their stock basically being outpaced by all their big competitors. Unless there are new scandals to be discovered underneath this sort of third CEO in a row, I don't think it's likely that they're going to break up the bank.
All the same, some members of Congress keep raising new issues, along with prospects of further regulation.
Mr. Scharf, is Wells Fargo too broken to fix?
Chairman Brown, I'm very confident that we have made changes which will enable us to put all of our historical problems behind us.
The bank says it will take time to work through these issues.
I was brought in to bring about substantial change at Wells Fargo, and we have made tremendous changes. I've also been very clear since the day I arrived that it was going to take multiple years to make all of the changes that were necessary so that the company was run in a way that I'd be proud of.
In 2022, Wells Fargo has benefited from the interest rate hikes coming in at the Federal Reserve. This additional income is offsetting the bank's spending on legal costs in the scandal. For now, the scandal lingers as a notorious chapter in the debate over the power of banks in the US.
The Fed asset cap is the biggest thing holding back the stock of Wells Fargo. And the day that the news is reported that that asset cap will be lifted will be a good day for shareholders. It was a scandal and arguably the biggest scandal in banking after the financial crisis.
A lot of that angst came up again because now we were looking at Wells Fargo that was engaging in such obviously illegal practices on such a large scale.